All right. Hello. Good evening, everyone. All right. Now, sorry for the delay because my platform has actually shut down. All right. So I needed to set it up before I can turn on live. Okay. All right. Now, so thank you very much for waiting and let's get our session started. Hi, Jimmy. Hi, Mei Mei. Hi, KJ. Hi, Chong. All right. And of course, there are many, many more of you who have joined me on this Facebook Live sessions on Friday. Thank you very much for being here together with me. And let's get ourselves started. Okay. All right. Now, so the same drill, I will go through, okay, what I see in the markets right now, okay, and 1 week later, the market has changed, all right? The whole market sentiments right now is totally different, right? So am I bearish? Am I bullish right now? What do I expect in the coming week, all right, from the markets, all right? I will be sharing with you in a couple of moments, okay? Now, but before I do that, let me set the ground rules right, okay? Let me set the disclaimers for every sessions as well, right, before we kickstart. Now, this is a public session. So in my public sessions, my aim, my goal, right, is to show all of you what an option selling portfolio can do for you as an alternative to buy and hold. Right now, so many of you will go to the stock market, you will build portfolios, buying some of the best stocks, right, and creating better than expected returns. Right, so you are looking for returns that pays you better than the mainstream financial institutions. Right, so I want to show you, right, that by being an option seller, right, it is not difficult because what we do right here, right, is just once a week sessions. And sometimes due to commitments, right, I may not even run the sessions. And those of you who have joined me since 1 year ago when we started this journey, you would notice, right, I actually started with only a 10% exposure in my portfolio, right, and then slowly adding one extra stock or one extra trade, all right, into the portfolio until, we kind of hit 80, 90 or, max portfolio exposure right now. And right now in this current market, yes, we are high. Yes, you may feel it's very threatening, but I am still almost 80 to 90% exposed in this investment portfolio that I'm building. So what are the key criteria? Number one, I look for investment grade companies. Number two, I look for undervaluation in their stock prices. Okay. And number three, I choose to sell portfolio put options, or you can call them cash secured puts, right? Rather than actually buying the stocks, right? So this is just my preferred choice, right? I have a very simple goal, right? To hit a double digit returning portfolio, right? With minimal work, right? We take less than 5 minutes, right? To discuss about the trades I want to add, all right? And that's it. All right, now, so this is what I call a long-term portfolio. It is not, and it is different from an active and trading portfolio, right, that I hold and that I teach, okay, and trade together with my trading members, right, on a week-to-week basis. Okay, so you need to get your ideas right first, okay, that came out in the wrong way, right? You need to get your objectives right first, okay, because do you want to trade? Do you want to invest? What are you trying to build, right? Do you want something that's hassle-free, right, but willing to give it a bit more time, right? Or do you want something that produces, right, but you need to be more active and you're committed to it, right? So all this will result, right, in different outcomes, right, and different commitment levels, right? So decide what you're ready for, right, and then, right, we can see how we can help you further up this journey, right? So this is done free over here on a Friday, right, with a simple aim to educate you, to let you know more about option selling, right, and explore the possibilities together with me. Yeah, okay, and what you can do, all right, and how you can build better results, okay, and get better returns with lower investment capitals, all right, if you're interested to explore more. Okay, now, so with that out of the way, let's get our session started, okay? All right, now, so we do still have some Facebook users who are joining us. So if you are classified as a Facebook user, or if you're not sure, right, if you have done this process, can you help me do this? All right, go over to the banner that you see, all right, streamyard.com/Facebook. Right, you can type it out in a separate window as well. All right, and then once you hit that link, you should see a Facebook button. All right, just click to approve it. All right, so that we can see your profile when you leave a comment. All right, the next time. Yeah, okay. All right, please go ahead and do so if you have not done it already. Okay. Now, and I'm gonna remove the banner. All right, before some of you start screaming my heads off again. I'm getting used to this. Okay. All right, I'm improving. I'm also improving. Yeah. Now, so let's get our session officially beginning. All right, and we can give you back your weekend. All right, now, so this is the SPX chart, and I've said this over and over again. All right, if and until it cracks the 4510 level, right, the market is still in a zone, right, but we clearly broke it with upside momentum, right, and I'm pretty sure that I did say this last week, right? What I didn't like in the market was this divergence, right? It was a positive divergence, right? As the prices was heading lower. Yeah, as you can see over here, right? When the markets or SPX form a lower low, right? The RSI was actually forming a higher low, right? So with this divergence, I actually felt that over here, right? The market was done in the selling off, right? And we might see a rebound. I just wasn't sure how strong this rebound was, right? And once it took place, once it hit here, right? I was actually pretty sure that this RSI, right, would move all the way to the top to complete what we call a cycle, right? Before it makes the next move down, all right? And there we have it. All right, now, so as market continues charging forward, right, you may be asking why, right? Okay, I'll explain in a minute. There's justifications behind this recent move in the markets, right? Now, but it has surely pulled up the RSI, right? But we're still not at overbought levels. So all of you must understand, the market is not overbought, which means, right, there are still no obstacles that stops it if it wants to go much higher. Yeah, okay, so you must understand this very clearly, because some of you will be thinking, oh, Terence, it went up too much too fast. It's time to short it. No, that's not a justification. Why? Because number one, just this one indicator is not telling you that the market is overbought. All right, and number two, right, if you can see, the market has broke out, right, to a new high. It is at a new high, right? So now the previous high is actually supporting this current price, right? So even if you want to short it, you have to see that the SPX closes back below the previous high, right? Because otherwise you're just going on a gut feel, you're just taking a gamble, right? And that obviously isn't a good strategy in the long run. Yeah, okay, so don't do that. Don't fight the trend, all right? Otherwise, you're the one that's going to get killed, okay? All right, markets are going to be choppy. That's for certain, all right? Market's not going to go up like this on a one-way street. Yeah, okay, it's going to get choppy. There will be corrections. All it takes, all right, is one bad day. Now, so let me justify why the market has been so strong, right? Simple. Earnings have been blowing out of the windows, all right? And when I say earnings have been blowing out of the windows, I mean the numbers, right? Many companies have announced earnings that have beaten, right, their estimates flat down, right? They've beaten their estimates like 20%, 30%, 40%, and much higher. Now, many of these companies have come out later on, right, to say that they expect, all right, inflation and higher costs to hit them in the next quarter, all right? But remember, this quarter, all right, they have excelled. Yeah, okay, so this has given the market reason, this has given the fund reasons, right, to back this move, right? Because they are saying fundamentals are there, right? So if fundamentals are there, right, they are back in the performance mode, right? They are chasing, they're trying to produce performance for the last quarter of the year. All right, so that's what they're doing right now. Markets have gone up. Market is in an upward momentum. They're just going to follow the trend. They're going to chase it, all right, until a reason tells them otherwise. So these are just algorithms, right? And algorithms takes the path, right, that is the easiest for them. So if the market is going up, right, they're just going to keep pushing it higher, all right? They don't fight the trend, all right? Algorithms are not built like that, right? Algorithms don't take the difficult ones. Right, they follow the trend so that it makes it easy, right, for them to do their job. Right now, so that's why you see this market over here, right, not like severely boosting upwards, but just aging and aging and aging that little bit higher every single day. All right, and then catching all those short sellers, right, who were short previously, right, and still thinking, right, that the market is still overvalued, right? But you must understand, market, right, can always stay overvalued for a much longer time then it will stay undervalued. All right, and that's been proven over the years. Right, when it wants to go up, there's no limit to how long it can stay up before the cookie crumbles. Right, but when it crumbles, right, people are very quick to see value, right, and start picking up the pieces. Right, so that's the rationale behind it. I hope it's simple enough. Okay, now with all that said over here, right, so this is going to guide my movements, right, into the trades that are put into this investment portfolio. Right, and then, right, let's see what actions we can take, okay? So let's go to our portfolio. Let's see how much cash, right, we can add into the portfolio that we've built so far. Right now, so let's go back to the portfolio over here, right, and let's look through the positions. Right now, so we'll start off with the VZ stock. Okay, the last call option that we have sold have already since expired on the 15th of October. All right, so today, right, VZ has already bounced back higher. Right, so we're going to go ahead and try, right, to sell another call option with the same strike. We can take the 55 strike as well, right? It should pay us better right now. Let's have a look. Oh. It is not. It's only paying us 13 cents. All right. So it looks like I'm still going to wait off over here. All right. Now, so I'm going to wait for VZ to climb a little bit higher. All right. So we'll come back and we'll have a look again. All right. But right now, it just doesn't justify for me to take a 13-cent, right, cash collection, all right, and sacrifice the potential upside profit on VZ. All right. Why? Because number one, VZ is undervalued. It is trading at below 10 PE. Right, and number two, it sports a dividend return of almost close to 5%. All right, now, so that still pays much, much better than inflation. And very few stocks, right, are currently undervalued, right, profiting or profitable, right, at the same time, right, pays out a 5% dividend return. Right, so I'm comfortable with this. I'm more than happy to stay in the stock, right, and collect my 5% dividend payments. Right, so I'm staying with it. All right, so this week, right, we're still going to hold on to the stock position. Nothing is done for it, okay? Now, next one, Rio, right? Rio has been another frustrating trade for us, all right? But nonetheless, right, I'm still comfortable with the positions, right? So someone has told me, Terence, Rio is not going to go up simply because of what has happened to Evergrande, right? But that's one company, right? Now, if you are a big, established, profiting business, right, there's tons of customers, right? Will one customer crumble your entire business? It is pretty much like saying Intel. Intel lost Apple as a customer, right? But does that mean Intel, right, is not going to be profitable anymore? It is not the first time, right? A great company will always find ways, right, to work around, right, losing a customer, right? It is just how it is because it's strong enough, right? And it commands enough, right, power in its industry to do just that. Right, and that's the very reason why we chose the company to begin with, right? So Rio over here, right, has I think taken a plunge yesterday. It's recovered right now. Okay, we're back to 65. Okay, but we're nowhere near the 70 over dollars level, right, where we want to sell our call options. Right now, so we're still far away from that. The 70, we have actually sold our 75 calls, right? Yeah, now so we have collected 80 cents for it for the November one. All right, so let's have a look what it's worth today. 75 calls, right? It's dropped to about 20 cents right now. So I'll just leave it over here, right? Because we still got about 7, 14, 21, 28, about 4 more weeks to go, right? And there's still about 25 cents of premium left to this call option, right? So I'm going to leave it, right? And, let the stock do its job, right? So we just leave the stock, right? We let it do its job over here, right? And then we'll have a look, yeah? All right, now, Facebook user, right? Now, I have no idea. All right, what are you talking about? VIE stock, right? You might want to explain to me what's your acronym of VIE over here. Yeah, right now there's too many acronyms going out there. All right, next one, HIMX. All right, so we are assigned the stock on expiry last week. Right, so let's see what we can do with it or got to do with it. Yeah. I think we got a good deal, right? So let's do it. All right, now, so we bought the stock on expiry last week for $12, right? So what I'm going to do over here now is this. Okay, I'm actually going to sell a call on it, right? Why? Because it's not working. Okay, HIMX, right? By selling a 19 November call, right, for the same strike that I paid for the stock, all right, I'm actually able to collect about 25 cents, right, for this. All right, so I can collect about 25 cents, right, on a $12 stock. Now, so if we work out the ROIs, let's work this out very quickly. 0.25 divided by $12, that's about 2%, right, for a month, right? So if I get paid 2% return, right, waiting for 1 month, right, I have no problems with that because even if the stock goes higher, right, and my stock gets taken away from me, right, I still get that 2% that I'm collecting right now. So I would end up making 2% returns, right, even if the stock goes up. And that's okay with me because I've already collected premiums when I sold the put option. Don't forget that. Yeah, all right. So together, they provide me a pretty decent return. Yeah, okay. So I'm okay with that. So I'm going to go ahead and sell, right, the call options on my HIMX position. Okay, now, so let me go ahead and do that. All right, and let's get the order taken. All right, so we're going to add a 19 November $12 call strike, right, to the stocks that we were assigned on expiry last week. All right, so remember, all right, you only need to do this, right, if you were assigned the stock when the option expired. Right, if you don't have the stock, don't go selling naked calls. Okay, right, that is not what we're doing over here. Yeah, all right, that's not what we're doing over here. All right, there we go. All right, I've sold over here HIMX $12 call options. I've sold 3 of them for 26 cents. Right, so my order is filled. It is done. Right, the call options are added right onto the stock ownership. Okay. All right, now so that is done. Let me get there. All right, now so let's add the call options to HIMX. All right, trade 65. This is HIMX. 19 November, $12 call. Right, we are doing this on the 22nd of October. Right, we collected 25 cents. Right, all good. Now, so this would pay us $75 in cash flow. Right, and it would add on to the 357 that we collected from the portfolio puts. So even if my stock get taken away from me, right, I would have made over $400, right, in cash flow collection, right, from trading this stock. Right, hence I said I'm perfectly okay. Right, because that is a decent cash flow created out of a very cheap stock. It's only $12. Now, even if the stock doesn't go up, that's okay because I collected back 2%. It helps me buffer, right, the paper losses that I'm looking at. And potentially, I still keep the stock and I can still sell another set of call options. Yeah, okay. Now, so that's it. All right, now that's the HIMX position. Right now, I do know that someone has left the comments. I'm not sure if you came back and went further on it. Variable interest equity. All right, now, right, so I just saw the stock, JD. All right, now, so number one, all right, first we have to decide, all right, if I still like the company, right? At the moment right now, I still don't like the uncertainty in China stocks, in China markets, in China stocks, right? So for that reason, I'm not actually getting back in yet. Okay, so, I'm more than happy to miss the boat, right, than to get myself in on a bad trade. Right, especially with stocks, right, that are as volatile and as risky, right, as China stocks at the moment, right? So no, I'm not interested in playing with it. All right, now, so it's just different strokes for different people. All right, we focus on pretty much very strong, fundamentally strong companies and profitable, right? But they are not loved by the market, so they are presenting great valuations. Because after all, this is an investment portfolio. Right now, if you come on board, all right, and you're one of our trading members, of course, we can look at this from a trading perspective. Yeah, right. There may be trades, short-term options that we can do, right? But from an investment objectives, no. Right? I won't be interested in these kind of stocks because they present too much risk on a portfolio. Right? Probably I can say this. Maybe I'm getting old, right? It won't allow me to sleep well at night. All right, now, let's go to the next one, PFE. All right, now, so the next stock over here that I have will be PFE. There we go. All right, so PFE 4283. We do have a December. All right, we have a December $44 put, so probably no actions on this stock, all right, because the stock is still underwater. Yeah, all right, so no actions on it. Next one, GILD. 67. We have a December 67.50. All right, still worth about $3 on it, so it's break-even trade. All right, so no go. Right now, so for Intel, all right, this will be an interesting one. It is earnings day today. So some of you may be asking, Terence, why didn't you get out? How would I know? Right, but actually, let me tell you a more simple concept over here. This is the main difference, right, between an investment portfolio versus a trading portfolio, right? So let me justify this a little bit. If I was doing this trade, right, from a trading perspective, all right, and I had profits before the earnings date, I would have taken the trade off, right, because it came from a trading angle, right? There wasn't a fundamental reason behind it, right? But here on Friday session, every trade that I take, right, comes from a fundamental angle to begin with, right? Now, so even after earnings, right, can you see, right, the big sell-off today? It's almost what? 10%. The stock dropped 10% today, right? Now, but, right, it hasn't changed. The PE is still very, very low. The company is still very, very cheap, right? And from the earnings, this is frustrating. I need to change my laptop soon. This is frustrating enough to get me to change. Okay, now let's look at the earnings that came out today. Look, everyone, the estimate was 110, right? But the company reported 170. This is a blowout earnings, right? Why did the stock drop? Because probably, all right, the CEO said something about the next quarter that people don't like, all right? Now, so that is the difference. But we can't fault the company, right, on their earnings. They did really well. It's exceptionally well, all right? Okay, it's exceptionally well. All right, now, so you must understand, all right? So I don't really care, right, if the put options that I sold got smashed or not. Why? Because fundamentally, the company stock is still cheap, right? It's still cheap. And my options doesn't expire all the way to December. All right, now, let me just double confirm this. Did I do a December or did I do a January? Right, yeah, it doesn't expire to December. Yeah, right now. So from now, right, until December, right, I'm pretty sure, right, that once they realize how depressed this stock is, right, they're gonna buy it back up. Probably not over the next few days, right, but maybe a week after, 2 weeks after, they're gonna start buying this back up. Right now, you may be asking me, but Terence, how do you know this? How are you sure? Simple. I can give you an example. Shall I? How many of you want to see a like-for-like example? How many of you want to see a like-for-like example? Right? Type me in the chat box. Right, Andy, just to answer your question first, you are seasoned enough, Andy. All right, Andy, you're seasoned enough. All right, so you would have your own set of TA to follow right now. So you can go ahead and make your decisions right now. If you like the trade, if you like the fundamentals, if you feel that it is not too early, all right, to go in right now, then by all means. Yeah, okay, Andy. Okay, good. Now, so many of you have commented. Simple, right? Let me show you a like for like. Let me cancel out Andy's comments first, right? So that you can see the screen. Okay, ready or not, everyone? Because the same thing, right, happened to FedEx, right? Exactly the same thing. Look, FedEx had earnings that blew out. Yeah, right? Okay, oh no, this one didn't blow out, right? But it was affected by earnings, right? And then, right, look what happened, right? The stock fell down, right? And now the fundamental, the PE of the company looks more decent. Before that, it was indecent. All right, okay, but after this fall in the stock price, because it fell to a low of 215, right? Can you imagine, right, that FedEx in the current environment where all the shipments go through them and UPS, right? And even Amazon can't cope with their shipments. So all those excess shipments will still have to come back to FedEx again, right? So FedEx have no issues with trying to get customers, right? And they are even raising their prices along with the inflation, right? And the corporates just can't escape. They need to get their stock, whatever goods shipped out by the next day. They've got to use FedEx, right? They have to, whether they like it or not, whether the cost increase or not, they have to use FedEx, right? Now, and because of this, and once the funds realize how cheap the valuation is, can you see what they did? After hitting the low of 216 and then finding a bottom, settling, right? Look where it is now, right? And look how quick, right? It went back up, right? Because it went from 215 to 230, right? Within a span of under 2 weeks. Right, so I'm telling you, that's why I trade only fundamentally strong companies that are already at depressed prices. Because even if, right, the short-term conditions doesn't favor them, right, but they have already been sold, right? There are no sellers who want to sell them anymore. So once the buyers come in, the stock can go up very, very quickly. Oh man, I've said too much again. right? These are paid information. All right, okay, these are paid information, right? But it's it's it, it's out, it's done. All right, okay, it's done. All right now. So anyway, all right, so that's Intel over here. All right, so I expect the same thing to happen to Intel, right? And it's not like the first time it's done this. It's done this so many times around, right? It's done this over and over and over again, right? It's not like one time. Look, right? Bam, it got affected by earnings, and then it stabilizes over here. It started going back up, right? And this time, bam, it got affected by earnings, so it's slowly going to climb back up, right? That's it, right? That's just it, right? Because when the markets come crashing or when the markets come correcting, right? Where do you think the fund managers are going to move money? They're going to move money into value stocks or depressed stocks, right? That's it. Right? Then who's value? Who's depressed? Who's still making money? Oh, you mean Intel is? Right? You mean Intel is that cheap? I better move some money in. Right? And what's going to happen? Yeah? All right? Okay, that's it. Yeah? Do I still have the JD position? I believe I've closed it, right? Yes, we've closed it. Here we go. I've closed the JD position way long ago. Yeah, right. We sold it for $9.35. We closed it for $7.05. It's already done and dusted. Yeah. All right. Okay. I'm not sure who this is, right? Because if you recognize the JD trade, that means you've been following us. But unfortunately, all I'm seeing you right now at the moment is a Facebook user. All right. So I'll probably need you, all right, to approve it, all right, before doing so. Okay. All right. Okay. You need to approve StreamYard. All right. Otherwise, I don't know, all right, who's leaving the comment. All right. Let me see. We closed it on 3rd September. All right, that's like more than 2 months ago. All right, we closed it. All right, I believe because I said, all right, that the China stocks have already experienced a strong rebound. Right, so we got out. Right, because the reasons, right, of why we got in the trade was already given to us. Right, for that quick rebound. Right, and we got it, so I'm getting out. Right, so I got out of it. Right, that's why. Okay, now, so that explains Intel over here, right? That's done. Right now, next trade is KSS. Now, so we have a 17 December 45 puts for 283. Oops. All right, KSS. Oh, man. Yep, Intel needs to kick up the... Do it! Right now. So the fortunes have turned around. All right now. So like I said, all right, when a company that is profitable, right, is severely undervalued, which is why we got in on the trade last week, right? Okay, on KSS, right? This is what we expect. Yeah, right. And this is happening on KSS right now, right? So as you can see, the stock is recovering, the stock is charging up, right? And that's it, right? Because we sold it last week for 285. Right now, if we check back, all right, and we see what it's worth today. All right, where is it? All right, it is only worth about what, $2? Right, so we could have closed this in 1 week for 80-cent profit. Right, okay, and that's very, very good because it's just 1 week. Right now, but right, looking at the charts right now, okay, I see that this can cycle all the way to the top. Right, so I think it's still too early to get out of this trade. Right, so at the moment, right, I'm staying on with it. Yeah, right, I'm staying on with it. Yeah, okay. All right, now, Elaine, let's look at your questions. Okay, Elaine's question is, if you are unable to buy puts for Intel, right, can you buy calls for this? I apologize. Do you mean that you are unable to sell put options on Intel? Right, is that what you're trying to say? Right, because buying puts on Intel and buying calls on Intel is 2 different trades. Yeah, okay, when you buy a put option, you're expecting the stock to go down. Right, okay, but when you buy a call, you're expecting to go up. So you realize that the statement you just typed doesn't really tally. Yeah, right, okay, yes. So you mean selling puts. Right now, I realized that just in the last month, right, anyone who has opened a new trading account with TD Ameritrade, right, has got a tier issue, right, where you need to have tiered approvals, right? And it seems like it is challenging at times if you come from a zero experience, all right, okay, to get a tier 2 or a tier 3 approval clearance, right, in order to sell options, right, be it whether a spread or be it whether naked, right? If that is your problem, all right, that means if that is your difficulty, all right, just go ahead to Tastyworks, right? Tastyworks is another US broker, right? That is, equally fine to go along with, right? They have a fair commission structure, which is one of the cheapest around. Just go ahead and do it. Yeah, all right, okay. Just go ahead and do it. Yeah, okay. Now, so if your difficulty is with the account approval, right, then go ahead, right, try it on Tastyworks. That will work fine as well. Right now, buying options is a totally different game. All right, why? Because buying options, you need the stock to go up, right? If the stock doesn't go up, you will still end up losing money, right? But if you have followed us long enough, you will realize that many of my trades, right, they didn't go up, they didn't go down either. They just sat there, right? But right, we didn't lose, we made money, right? So that's the reason why I chose to be a portfolio put seller rather than buying stocks, because my stocks are all boring stocks. Hence, you see questions like why people are looking for more exciting stocks. But this is an investment portfolio. This is a portfolio where I take action only once a week, right? Do I want it to be heart pumping, adrenaline driving? No, I want it to be as simple as possible, fast free, hassle free. Yeah, okay. Okay, now, so Elaine, if it's a small capital issue, right, then you have some choices to make, right? Join us, okay, because we can show you how to take the same trades, right, with much, much smaller capital requirements. That's what we do in our mentorship programs. That's what we do in our trading membership, where we trade with our participants and our members, right, where we do this, right, similar trades over here, only on a capital requirement of $200, $300, or $400, right? So, come into one of our mentorship programs, all right, and see how we can help you, all right, grow those small capital portfolios, right? But buying call options is never a good idea, right? Because if you want to buy the call option, I'd rather you just buy the stocks, okay? Because when you buy call options, there's 100 shares. And your problem right now that you're dealing with is small capital. I'd rather you go out there and buy 5 Intel stocks than buy one call option, which controls 100 shares, right? That isn't a good idea, okay? Yeah, right now. So I hope that feedback helps you over here. Meme, if you are owning Facebook stock right now, okay, the same question applies, right? Do you believe that the company, right, will rebound going forward? Okay, which I cannot comment, okay, but we do agree, right, that a lot of businesses, right, will still require Facebook platform, right, for their advertising purposes, right? So for that reason, right, I still see that they are going to make profits, but they've got a lot of headwinds to deal with right now. The company's image has been tarnished, right, with the 2 recent whistleblowers, right? It is very, very bad, how do we say this, PR for the company right now. So the question is, how quick will they turn around from this, right? It is unknown, right? It is unknown, right? Okay, so, that's my problem with Facebook at the moment, right? So if you want to sell call options, yes, you can, provided if you own 100 shares, right? Provided if you own 100 shares. Okay, now if you're going to ask me, Terence, what call strike should I choose, right? Ask yourself first this question: at what price are you willing to let someone take away your Facebook shares, right? And then look at how much it's paying you, right? If it is not paying you enough, right, that means based on the strike price that you're choosing, if you're not getting paid enough, then don't sell it. Just like what I did with VZ just now. Yeah, I wanted to sell something, but you only paid me 12 cents. Nah, it doesn't justify, right? Collecting $12 for one option, it doesn't shout, do it. Yeah, okay, so these are your decision-making process, okay? All right, Jimmy. All right, HCA has good earnings, but the price plunge as well. All right, any particular reason? Simple. Usually, all right, if the earnings have broken past the estimates, right, and the stock price goes down, it is because of what the company came out to say in their earnings call. All right, and usually it has something to do with, we see headwinds going into the next quarter. We see that our next quarter's earnings will be impacted. It will be affected along these lines, right? Because in the stock market, right, prices are already adjusted for. That means, all right, the price right now has already adjusted for the expectations of these earnings, right? And what the company says, right, moving forward is what will move the stock price now. Okay, Jimmy, do you get it? All right, so it is always going to be what the company says. All right, welcome, Mei. All right, Mike. right? What is the time frame? What is the minimum time frame, right, for collecting premiums when I sell these cash secure puts? There is no time frame, right? The main driver is this: how long, right, do I want in on this trade, right? Do I expect the stock to go up very quickly? If the answer is yes, I'll choose a shorter term, right? Do I need to give this stock a little bit of time, right, for it to go up? If the answer is yes, then I would sell a longer expiry, right? Provided if the ROI justifies the trade. It is always about the ROI, right? Now, if I ask you to do something for me, what will your question be, right? Is it worth my time? Can you see the chain of thought? All right. Okay. Now, so that is always the chain of thought. If I sell it 2 months, right, but it still lets me make 20% per annum when I annualize it, it's okay. Right. If I sell 3 months, if it is still a 20% annualized trade, I will still do it because that's my goal. That's my objective. Right. By doing this, by taking this step, it gets me closer, right, to my big aim, right, that I want to achieve. Okay. All right. Now, Mike, is that clear? Okay. So that's the thought process. That's the decision process. Right, Jimmy, you got it? Okay, awesome. Andy. All right, okay, Andy, great on you, okay? All right, like I said, Andy, all right, as long as it's money making, you're always in, yeah? All right, thank you for letting me know. All right, it's a free session, but if you're making money, all right, awesome. All right, why not, yeah? All right, but always remember, okay, disclaimer applies. All right, I'm just sharing my thoughts. Right, I'm doing this from an educational angle and educational purposes. Right, as long as you know your risk, you're comfortable with it, by all means, right, take the action. All right, Jimmy, no problem. All right, okay, no problem. All right, that's what you're here for. Right, you're investing your time every Friday by being here with me, right, so that you can pick up more golden nuggets. Right, and that's what I aim to do as well. Right, I will always spill my mouth. Right, okay, in Dala we call it pre-tweet. Right, yeah, okay, it happens. Okay, it happens. Yeah, right, but all for the good reasons. Okay. Yes, I've talked so much that I forgot what I want to do. Right, there is one stock, all right, that I actually want to add. Yes, after talking so much, I actually want to add one more position into a portfolio. Can it stomach? Yes, it can. All right, so I'm going to do this. All right, it's going to stretch the portfolio in terms of exposure, but I want to add this right now. Okay, everyone. All right, now, so the stock that I want to add in today, ready or not, all right, I'm going back to a boring company. I'm going back to drinking soup. Yes, I want to go back to drinking soup, everyone. Right, so I'm looking to sell, right, a $40 put option for December, right, on Campbell Soup. Right, that's what I'm doing over here. Right, so I'm establishing a position, a portfolio put on Campbell Soup, all right, for my portfolio today. Think of it this way, right? If the market continues to go up, all right, this might be a low cost, right, or no, not low cost, but low risk way of participating, right, in the potential upside. Yeah, okay, so that's my take over here. Right, 17 December. All right, let's go. $40 put. Right, because my portfolio is a little bit overstretched right now in terms of exposure, right, I'm going to take a 2-option contract trade, okay? Right, I'm going to take just a 2-option contract trade. Send the order, but it doesn't want to get taken. Oh, well, forget it. I'll just take it. I'm more than happy to take it. All right, so let's take it. All right, now I've just took the market price over here of $1.10, everyone. That's what I did. Right, you can queue for 115, which I think it can be done, right? But we're just gonna close the session. So I'm more than happy to get this trade out. Right, so I'm selling 2 options for Campbell Soup, $40 put for December, right, for $1.10. Right, so that's the trade that we add on today. Now we did 2 contracts, so let's put it on our portfolio. All right, trade 74 before the month ends. Campbell Soup, 40. 2nd October to Was it 2 or 110? Right, 110. Right, so this trade is going to pay us 2 contracts, not 3. Right, $220 in cash flow, which I added today. Right, and the potential exposure or the potential investment capital is $8,000 for this trade. So this will bring my portfolio exposure to $107,000. So the portfolio is worth about 117 after the first year. So I'm going to be about 90% exposed right now. Okay, 90% of my capital is fully invested in the market right now. Okay, I'm comfortable with it. Let's do the ROI calculations for this stock. All right, or this trade, sorry. 110, right, divided by $40 investment. That's $275, right, for how many weeks? It's 56 weeks. So I would believe that makes it about 9 weeks. 8 weeks, right? That's 8 weeks over here. Right, so all I need to do now is to divide this out by 8 weeks and then annualize it. Right, so this trade will bring me an annualized return of about 18%. It is a little bit short, right, but it is still near there. Right, so I'm more than happy with it. Right, so this is the trade I went with. I took it. All of you saw it got filled. Right, and right, this portfolio cash flow was added today. Right now, so with that, this is all the trade I'm doing today. This is what I've added to the portfolio. All right, and right, we will see what we have. Okay, in our next episode. Okay, all right, we will see what we have in the next episode. All right, Andy. All right, thank you very much. Okay. All right, now, so thanks for your support, everyone, once again. Right, I hope you enjoyed the session again today. Right, and okay, if you do, all right, find it useful, if I added a little bit, all right, of more knowledge, all right, into your understanding and your investment journey, right, please help me click the like button, right, and also hit the share button, right, to reach out to your friends who are looking to start their own investment journey. Right, bring them along on Friday. It is free information after all. Right, I'll be more than happy to help them out as well. Okay, now, meanwhile, thank you very much. Have a great weekend ahead. Right, and I'll see you in the next episode. Okay, everyone, this is Terence Tan, right, the I'm Possible Investor, signing off for this Friday's Portfolio Cash. I'll see you in the next episode. Bye for now, everyone. Thank you very much for being here.